Hello students, welcome to Accounting 2401. This is Principles of Financial Accounting. This is Dr. Mercado speaking, and I'm very happy and excited to have you in my class. Now in this particular lecture, we are going to be covering Chapter 1, which is an introduction to accounting and business. The textbook that we are using is Financial and Managerial Accounting, 16th edition. Okay. Now, what I'm going to be doing is I'm going to be selecting every week, depending on the chapter that we're working on, some one or two or three problems, depending on the length of the problems or the number of problems assigned. But I'll be working a couple of problems for you each week. Usually, I select the more complex problems or the problems that you're going to be seeing on your upcoming exam, because I want to make sure that you get a complete understanding of those problems, okay? So it's very important that you listen to my lectures. That way you have a better understanding, okay? And like I said, I try to work out some of the more complex problems that I see students struggle with the most, okay? I will not be covering every single problem with you. That would just be very time consuming for me to create all of these lectures. Plus, I also want students to understand and apply what they've learned in the chapter based on their reading and the examples provided. So I am not going to cover every single problem, but I will try to cover some of the more challenging problems and some of the problems that you'll be seeing on your exams. Okay, so before I begin in this particular lecture, I want to just make a general announcement. Okay, things to do each week. Okay, it is very important that you follow this to-do list every week. Okay, the first thing that we need to do is read. Please read the assigned chapter. Okay, reading is not an option. You must read to be able to understand what is going on. Okay, I've had students come back and say, Miss, I'm completely lost. Well, where are you lost? And then, I have a conversation with the student and I find that the student failed to read. Okay, if you don't read, you have no idea what the chapter is about, so you will not be able to complete your assignments. So reading is critical. Review the examples provided within the text. Don't just ignore all of those examples. They're great examples. They provide very useful information. As you're reading and as the textbook is explaining the examples, please go over those examples in detail. I provide PowerPoints in Blackboard. Please download those PowerPoints, review them, use them to take notes. Okay? I upload lectures, just like the lecture that you're listening to right now. I select a couple of problems every week, depending on the chapter that we're covering. And I upload those lectures to hopefully help you better understand the content. Okay. Now, my lectures are not a supplement for your reading. Okay. I will not be going over everything in the chapter. Okay. I will not be going over the content per se of what was explained in the chapter. My lectures are more problem solving based. How are we going to solve this problem? Okay, so in order for you to understand what I'm doing, you must have read the chapter so you can understand what is it that is being covered. So you read, you go through all of these resources, and then we get to the problem solving part, which is where I come in to try to supplement some of the information provided with my lectures. It's supplemental. My lectures are supplemental to strengthen the information already provided in the text. Okay. Once you're done reading, reviewing the PowerPoints, listening to my lectures, then you can begin working on your assignments. Every week that we cover a chapter, you will have a quiz and a homework. Okay, to help you understand if you understood what you read, and apply what was learned in the chapter to actual scenarios. Okay. If students have any questions, you are more than welcome to contact me. I'm here to assist you in anything and everything that I can. Okay. But in order for you to do that, you must reach out to me if you need any assistance. Okay. Please refer to your syllabus for my scheduled office hours. Okay. I'm available Monday through Friday. Okay. If you have any questions on the weekend, I will not be answering those questions until Monday. Okay, so if you have questions or concerns, please make sure that you get with me Monday through Friday. The weekends are for me. I will not be answering any questions during the weekend. Okay, if you have any questions on a specific problem, please make sure that you include the problem number and your attempted step-by-step solution. I want to see what you're doing so I can review your work and provide guidance. I'm not going to give you the answer. I'm going to see what you're doing and make any corrections to what you're doing, pinpoint what you're doing wrong, so that way you can fix it and you can be able to correct the issue that you're having. Okay, I want to see you try to work out the problem. Okay, please make sure that if you send me an email, you include your name and the class that you're in. I have a lot of students, so if you send me a Blackboard message, just I have no issues with that, because on the Blackboard message I'll know what class you're in and it'll include your name. Okay, if you send me an email to my STC email, then that's when I need to know, okay, your name and what class you're in. Okay, sometimes your email is weird, weird username. Students don't include any names. They don't include what class they're in. They don't include a problem number. They just tell me, Miss, I'm lost. Okay, I need more than that. Okay, hi, Dr. Mercado. My name is Mickey Mouse. I am working on Chapter 2 homework, problem 2.8. And I have the following questions for you. I don't understand this. This is what I'm doing. You tell me what you're doing, and then you let me know any other concerns that you have, and I'll get back with you. Okay, but I need to know your name, what class you're in, and your attempted solution, and the problem that you are working on. For me, it's very difficult that students, Miss, I was working on a problem and I don't know where we're getting the liabilities. I was like, well, what problem? Okay, I don't know. So you tell me, you have to be specific. Give me information so I can be able to assist you. Okay. Please print a copy of your syllabus and keep it handy at all times. Your syllabus, towards the end of your syllabus, you have a schedule which includes all of the assignments that need to be completed during the semester. Okay, that way, as you're working your assignments, you mark them off and you make sure that you complete all of the assignments for each specific week. I will not be granting any extensions or makeups because you forgot to work on your assignments. The assignments are clearly stated. I post announcements on Blackboard, so there is really no excuse for you not to complete your assignments. Okay, if you have some sort of an emergency that will not allow you to complete your assignments on time, please make sure that you communicate with me. Contact me as soon as possible so we can work something out. Okay. So, like I stated, I will not be covering every single problem in your homework, but in your homework, you will have, this is an example of your homework for Chapter 1, okay? The majority of the problems have a Show Me How video. So if you see here, if you click on that Show Me How, it will go ahead and send you to another link where you'll be able to see a video that you can use as guidance. Okay, so a video will populate and it will help you solve that specific problem. So when you're on your homework, you'll see the ebook, the Show Me How videos, Office 365, if you want to print the item or if you want to report a content error. If there is a video, you'll see a link for the video there that will help you complete this specific problem. Okay, and like I said, most, not all, but most of these problems have a video. Okay, like for example, problem 1.3 does not have a video. You don't have an option for a video. Okay, so this problem you have to figure it out on your own based on your reading and the examples provided. Okay, but like I said, a lot of these problems do have that video. It's a great resource as a supplement to your reading to be able to complete the problem. Okay, so Chapter 1. Okay, I'm not going to go over all of the content over Chapter 1. It is up to you to read Chapter 1. There's a lot, what you call a lot of useful information in Chapter 1. Chapter 1 sets the tone. You must understand Chapter 1 so we can move on to Chapter 2. Okay, now the learning in this class is cumulative. Okay, whatever we learn in Chapter 1, we're going to apply it in Chapter 2 and any ongoing chapters. So we're building. It's like a building block kind of a thing. Every week we learn something new, but we never forget what we learned in the prior chapter. Okay, so it's very important that you read the chapter. It provides you a lot of information about generally accepted accounting principles, characteristics of financial information, a variety of assumptions and principles that we need to understand are also included. And then the chapter goes on to explain the accounting equation, that's what my focus is going to be in this particular problem. Okay, the focus of this problem that I'm going to be covering, which is problem 1.1a, is going to be dealing with the accounting equation. Okay, so the accounting equation is comprised of three factors. The first thing we have is the assets, liabilities, and equity. So we have three components. Okay, assets are basically anything that is owned by the business. Okay, examples include cash, land, buildings, equipment. It could be supplies, accounts receivable. There's anything that the company owns that belongs to them is an asset. Okay. The next component that we have in the accounting equation is liabilities. Okay, liabilities is anything that we owe, any debt. If the business purchases anything on account or borrows money from a bank, they owe that money to someone. That is a liability. Okay, and the third component is equity. Okay, we have depending on the type of business that we have stockholders' equity. That's in case that stock is being issued. For a proprietorship, partnership, or a limited liability company, we just simply call it owner's equity. So if we have a corporation that issues stock, it's stockholders' equity. If we have a proprietorship, partnership, or limited liability company, it's just simply owner's equity. In the equation, we just refer to it as equity. Whether it be stockholders' equity or owner's equity, it's just equity. Okay? And the accounting equation is very useful for reporting the financial condition and changes in financial condition of a company. The accounting equation must always be in balance. Okay, assets must always equal liabilities plus owner's equity. That is the core of accounting here. We must always maintain the equality of the accounting equation. If assets increase, then there needs to be an offset to that. Okay, if liabilities increase, there needs to be an offset. It's a balancing act. Okay, so important things that you should note. The effect of every transaction is an increase or a decrease in one or more of the accounting equation elements. The two sides of the accounting equation must always equal. Okay, the stockholders' equity is increased by amounts invested by stockholders, that is considered our common stock. The stockholders' equity is increased by revenues and decreased by expenses. And the stockholders' equity is decreased by dividends paid to stockholders. Okay, so these are basically the effects of the transactions on stockholders' equity. Okay, so we have two components under stockholders' equity. This is kind of like the more complex section of the accounting equation. So assets, anything that you own, liabilities, anything that you owe, and then equity is made up of these items down here. Okay, so this is the one that is a little bit more complicated to understand. Okay, so under stockholders' equity, we have the stockholders' investments. That goes under common stock. Okay, that is added to your stockholders' equity. That increases your stockholders' equity. Okay. The distribution of earnings to stockholders known as dividends. If we pay out dividends, that decreases your stockholders' equity. Okay. Any revenues generated by the business increases your stockholders' equity. And any expenses paid decrease your stockholders' equity. Okay, the revenue and expenses are utilized to calculate either your net income or your net loss. Okay, now your dividends, revenues, and expenses fall under retained earnings, and your common stock falls under common stock. Okay, so this is just some general information. It is all coming from your book. Make sure that you read it carefully so you can better understand the information. Okay, now I have decided to tackle a pretty long problem with you. Okay, why am I doing this? Because if we don't understand how to analyze transactions, we're not going to understand basically what's going on or how the accounting equation is going to balance. Okay, so instead of me wasting my time covering little short problems here and there, I'm just going to tackle this monster problem, and that way we can hopefully see the entire process of how we maintain the accounting equation in balance. Okay, so the problem that we're going to be tackling is problem 1-1A. Okay, so it says on June 1st of the current year, Chris Bates established a business to manage rental property. Okay, the following transactions were completed during June. So we have transactions A through J. Okay, Instructions. We have to indicate the effect of each transaction and the balances after each transaction using the following tabular headings. And they're giving us the headings. I went ahead and I basically copied these headings over here. Okay, that way I'm going to be working off of Excel. That way you can see my work. Okay. And then we have to answer some additional questions. Okay, let's start off with the first requirement, which is basically we have to record these transactions in our accounting equation. We need to figure out what accounts does this transaction affect. Okay, so if you notice, we have assets. We have 3 assets, and these were provided to us down here. I didn't make these up. You know, the textbook provided us with the accounts that we need to use. So we have 3 assets account. We have cash, accounts receivable, and supplies. Okay. So that's what we have in our assets. Liabilities, we only have one liability, which is my accounts payable. And then under stockholders' equity, we've got common stock. Okay. Dividends, fees earned, rent expense, salaries expense, supplies expense, auto expense, and miscellaneous expense. Okay, so now we have to read all of these transactions and figure out where they belong in the accounting equation. Okay, remember, assets equal liabilities plus stockholders equity. Okay, let me put here plus stockholders equity. So assets equals liabilities plus stockholders equity. Okay. Let me just make this adjustment. Okay, there we go. Okay, so let's start off with the first one, letter A. And I've got letter A here. So anything that happens or dealing with letter A, we're going to put it in that line item. Okay, so it says we opened a business bank account with a deposit of $75,000 in exchange for common stock. So this is a brand new business, and I am the owner of the company, and I'm going to invest $75,000 in cash to the business. The business is going to give me $75,000 worth in common stock. Okay, so whenever you do accounting, and you know my children laugh at me, but I'm always talking to myself. Okay, I talk to myself because I want to understand what's going on. Okay, so I ask myself a question. Well, what happened here? Okay, well, it says here that I opened a business account with a deposit of $75,000. So that means, do I have more or less money after this transaction? Well, it says that I made a deposit to the bank, so that means that I have more money in the bank. So what's going to happen to my cash? My cash is going to increase. Okay, my cash is going to increase by $75,000. Okay. Let me make this a little bit smaller, because if not, I'm not going to fit. There we go. I'm not going to fit all of my accounts. Okay. So my cash is going to increase by $75,000. Okay. I've got more money in the bank. Why? Because we made a deposit of $75,000. Okay. What did I get out of giving the company $75,000 in cash? Well, the company in return gave me common stock. So I'm going to add $75,000 in common stock. Common stock was issued, so now I own $75,000 in stock. Okay. So that is the first transaction. Okay. Now they say to balance the accounting equation after every transaction, because that's the first transaction. I'm not going to balance it then. I'm going to do another transaction and then begin balancing after each transaction. Okay. Letter B. You purchase office supplies on account, $2,200. So we bought office supplies. Do we have more or less office supplies now that we purchased? Okay. Because we purchase office supplies, that means we have more supplies. So my supplies have increased by $2,200. Okay. Okay. Now the $1,000,000 question is, how do we pay for the supplies? It says here on account. That means that we took out these supplies on account. We didn't pay for them at that point. We owe this money to a vendor. Okay. So we need to pay that money in the future. So my liabilities increased. Okay. I owe that money because I purchased the supplies on account. So my liabilities increased, okay, by $2,200. Okay, so my liabilities increased by $2,200. Okay, so for letter B, supplies increased, liabilities increased. Now we're going to go ahead and we're going to balance the accounting equation. Remember, we have to make sure that after every transaction, assets equals liabilities plus owner's equity. Okay, so we're going to go ahead and we're going to balance the account. And I'm just going to bring down the balance. Okay, assets will always be positive. So it'll be $75,000 in cash. I've got $2,200 in supplies. Okay, I've got $2,200 in accounts payable. Okay, and I've got $75,000 in common stock. Okay, so now I get my calculator. Okay, remember, the left-hand side must equal the right-hand side. So on my asset side, I have $75,000 plus $2,200. I've got $77,200. This is on my asset side, $77,200. On my right-hand side of the equation, I've got $2,200 liabilities plus $75,000. That gives me $77,200. So both my left and my right side have the same amount. Okay. Letter C. You receive cash from fees earned for managing rental property, $19,500. Okay. And remember, we are in a business to manage rental property. So we receive cash for those services. So I've generated revenue of $19,500 by managing rental property. Okay. So it says that you received cash. So if you receive cash, do you have more or less cash? Well, we have more cash. Okay. If we receive cash, we have more cash, and we receive cash of $19,500. Okay. Now, why did we receive this cash? Well, we received this cash because we provided a service. We managed rental property. So we have an account here called fees earned. Anytime that you provide a service, you're going to have to record it. This is a revenue account under your fees earned account. So I earned $19,500 in fees for managing some rental property. Okay. So my cash increased, my fees earned increase. Now I can rebalance my account. Remember to get the balance that you calculated before, which was $75,000, plus the new amount of $19,500. That will give you $94,500 plus $2,200. Okay, so we need to bring those balances down. For supplies, $2,200. Okay, for liabilities, we're going to bring that down. Okay, common stock, we're going to bring that down. Okay, 75,000. Okay, and then fees earned is new. Okay. Oh, this should have been on my balance, not here. Okay. So this should be on the balance right here. Okay. So for your balance for cash, it will be 75,000 plus 19. I'm sorry about that. 75,000 plus 19,500. That'll be 94,500. Okay. Accounts receivable, we don't have anything. Supplies, we didn't have any transaction in letter C for supplies, so I'm just going to bring that down. Okay. For accounts payable, we didn't have anything in transaction C, so I'm just going to bring down my balance. I'm going to bring down my balance for common stock, and I'm going to bring down my balance for fees earned. Okay. Now that I brought down my balance, I'm going to add my new balance, which is 94,500 plus 2,200. That gives me a total assets of 96,700. Okay. Now we're going to balance the right side of the equation. 2,200 plus 75,000 plus 19,500. That's 96,700. So they're both the same. Okay, so that means that we are in balance up to this point. Okay. Letter D, you paid the rent on office and equipment for the month, $8,000. So we are paying for the rent. When you pay for your rent, do you have more or less money after you pay your rent? I don't know about you, but when I pay rent, my cash goes down in my bank account. Okay, so what's going to happen to your cash? Your cash is going to decrease. So I'm going to put a subtraction sign. Okay, my cash decreased by $8,000. Okay, so cash dropped by $8,000. Why? Because I had to pay the rent. Okay, so what did you pay with those $8,000? We're going to go and we're going to look at the accounts. Well, it says here that we paid the rent. Okay, so we have rent expense. So the rent expense is going to be a deduction from your stockholders. Okay, anytime you pay an expense, it decreases your stockholders' equity. Okay, so we have a decrease of $8,000 for cash because we made a payment for our rent. Okay, now we can calculate the balance and be very careful here. Okay, so you had $94,500 in cash before this transaction. Then you subtract the $8,000 of rent, and that will leave you with $86,500. Okay, and then you basically bring down your balances from the rest of the accounts. So I'm just bringing down all of my balances. If nothing was added or changed, then we just bring those amounts down. Okay. Okay. So then we go ahead and letter E. You paid creditors on account $1,850. Okay, so you are making a payment to a creditor you owed money to. So for letter E, if we make a payment, what happens to our cash? Our cash will decrease by $1,850. Okay, so cash decreases by $1,850, and we are making a payment to a creditor. Okay, remember we owed our creditor $2,200 for those supplies that we bought. We're now making a payment. So because we're making a payment, your accounts payable is going to decrease by $1,850. Okay, so your cash decreases, your accounts payable decreases. You no longer owe that money. Okay, so now we rebalance the account. So we have $86,500 minus $1,850. That will give me $84,650. Okay. Supplies, we have $2,200 in supplies. And if you see up here, we have the addition or subtraction. Okay, so we know if we have a rent expense, it will be a subtraction. Fees earned, positive. Supplies expense, minus. Okay, that way you can follow. Okay, now let's look at our liabilities. We owed $2,200, and then we made a payment of $1,850. So that means that we now only owe $350. Okay, we bring down our common stock, we bring down our fees earned, and then we bring down our rent expense. Okay, okay, remember rent expense has a minus sign, but when I'm doing my balances, that we know that rent expense will have a subtract sign. Okay, letter F. You billed customers for fees earned for managing rental property, $6,000. Okay. Okay. So we billed the customers, but they have not paid us yet. Okay. So they owe us that money. Okay. We've already provided the service. Now they need to pay us. Okay. So whenever someone owes us money, we need to set up a receivable. Accounts receivable. In accounts receivable, we keep track of any money that is owed to us, our company. Okay, so in this case, we billed customers and they owe us a total of $6,000. So we're going to add accounts receivable is increasing by $6,000. Okay, so accounts receivable is increasing by $6,000. Okay. Now, it says here you bill customers for fees earned. We need to update the fees earned because you know what? We've already provided this service. So we need to acknowledge that we have generated revenues of $6,000. So for fees earned, I'm going to go to my fees earned account and I'm going to add the $6,000. Okay. So my accounts receivable increases by 6,000. My fees earned increase by 6,000. We can now rebalance the account. So we're just going to bring down my 84,650 in cash. I've got 6,000 in accounts receivable now. I've got 2,200 in supplies. I've got 350 in accounts payable, 75,000 in common stock. I had 19,500 in fees earned, and I'm going to add 6,000 more. That's going to give me 25,500. And then I've got $8,000 in rent expense. Okay. So what we need to do is now make sure that our equation is in balance. I'm going to add my 84,650 plus 6,000 plus 2,200. That will give me 92,850. Okay. For my total assets, for my liabilities and stockholders' equity, I'm going to have 350 plus 75,000 plus 25,500 plus 8,000. Let me see. So let me see. We've got this is what the balance after F. So we've got 84,650, 6,000, 2,200, 350, 75, 25. Okay. Okay, I know what I did wrong. Okay, so we've got accounts payable 350 plus common stock of 75,000. Fees earned is an addition plus 25,500, and then rent expense is a minus 8,000. 92,850. So now that equals your right side and your left side. Okay, assets, liabilities, and stockholders' equity equal your 92,850. A, B, C, D, E, F, G. Okay. How many transactions do I have? Why am I missing transactions? Let me see. Oh, here we go. I was like, where are my rest of the transactions? There we go. Okay. So, letter G. You paid automobile expenses for the month $1,500 and miscellaneous expenses $800. So, you paid for two things in G. Okay. So, you paid $1,500 for automobile and $800 for miscellaneous. So, you paid cash of $2,300. So, if you pay for stuff, what happens to your cash? Does it go up or down? So by now we should know that whenever we pay for cash, our cash decreases. So cash decreased by $2,300. Okay. So what did we pay with those $2,300? It says that we paid $1,500 for automobile expense. So we're gonna find auto expense over here. And we paid auto expense of $1,500. Okay. And then we also paid miscellaneous expense of $800. Okay. So now we can rebalance the account. Remember, you always look at the prior balance, which is $84,650. And I'm going to subtract $2,300. That's going to leave me with $82,350. Okay. We're going to bring down my accounts receivable of 6,000. We're going to bring down our supplies of 2,200. Okay. And then we're going to bring down liabilities of 350. We're going to bring down common stock of 75,000. We're going to bring down fees earned of 25,500. rent expense of $8,000, auto expense of $1,500, and miscellaneous of $800. Okay, and then we balance the equation. Okay, so we have $82,350 plus my accounts receivable of $6 plus my supplies of $2,200. That gives me $90,550. Okay, now let's balance the right side of the equation. I've got accounts payable of $350. I'm going to add common stock of $75,000. I'm going to add fees earned of $25,500. I'm going to subtract all of my expenses, which is my rent expense. I'm going to subtract my auto expense, and I'm going to subtract my miscellaneous expense, and that gives me $90,550. Okay, your left hand side must always equal your right hand side. If it does not, you need to figure out at that point why it does not, and you need to correct it. The accounting equation must always stay in balance. Letter A, H, you paid office salaries $5,500. So we are making a payment for salaries that will decrease our cash. So I'm going to go ahead and I'm going to subtract $5,500 for that payment to my employees, office salaries. So what did I pay with those $5,500? I paid my salaries expense. So salaries expense will be $5,500. Okay? And then we bring our balance down. So we had $82,350 in cash. I spent $5,500 in salaries. That gives me $76,850. And then you basically bring down the rest that you did not have any impact on. Okay. 350, 75,000, 25,500, 8,000, 5,500, 1,500, and 800. Okay. And then we make sure that our accounting equation is in balance. 76,850 plus 6,000 plus 2,200, that gives me 85,050. Then we add or we balance the other side of the accounting equation. I've got 350 plus 75,000 plus 25,500 minus 8,000 minus 5,500 minus 1,500 and minus 800. And why am I subtracting? Because all of your expenses are subtracted or deducted. Okay? And that gives me 85,050. Okay, so my accounting equation remains in balance. Okay, letter I, determined that the cost of supplies on hand was $550. Therefore, the cost of supplies used was $1,650. Okay, so we did an audit of our supplies and we found out that the cost of supplies used for the period was $1,650. Okay, so we had supplies in a closet, everybody was using them up during the month, and we figured out that the amount of supplies used was $1,650. So what's going to happen to your supplies? Well, you need to decrease them because you no longer have those supplies available. Those supplies have been used. So your supplies is going to decrease by $1,650. Okay? So your supplies is going to decrease because you used up those supplies. And now we have to recognize those supplies used as an expense. So we're going to have a supplies expense of the $1,650. So your supplies decrease and then you had an increase in your supplies expense. Okay, so we rebalance the account. Remember, if there was no impact in the prior transaction, you just copy down. If there was an impact, like in the case of the supplies, we had $2,200. We used up $1,650. That means we only have $550 in supplies. Okay, and then you bring down the rest that were not impacted by this transaction. And then last but not least, okay, let's figure out if we are in balance. So I've got 76,850 plus 6,000 plus 550. So I've got 83,400 total assets. Now for my total liabilities and stockholders' equity, I'm going to have 350 plus 75,000 plus 25,500 okay, minus 8,000, minus 5,500, minus 1,650, minus 1,500, and minus 800. That gives me 83,400. So my accounting equation has remained in balance. Last but not least, we have letter J. We paid dividends of $4,000. So if we pay dividends, we give money to our stockholders. So what happens when we give money to our stockholders? Our cash decreases. So our cash is going to decrease because we made a dividend payment. Okay. So I'm going to deduct $4,000 for my dividend payment. Okay. And what did I do? I paid out my dividends. So my dividends are going to be shown as a payout of $4,000. Okay. Now we can obtain the final balance. Okay. These are going to be the final balances used. Okay. So we're going to pick up the last balance that we had. Okay. Which was 76,850 minus 4,000. That's 72,850. I'm sorry about that. 72,850. We're going to bring down the $6,000 in accounts receivable. We're going to bring down the $550 in supplies. We're going to bring down the $350 in accounts payable, $75,000 in common stock, dividends of $4,000, fees earned of $25,500, rent expense $8,000, salaries expense $5,500, supplies expense $1,650, auto expense $1,500, and $800 in miscellaneous expense. Now we need to figure out and make sure that before you do anything else, at this point the accounting equation has remained in balance. So I'm going to add 72,850 plus my $6,000 of accounts receivable plus my $550 of supplies. That's going to give me total assets of 79,400. Okay. So let me change this color. That way it's a different color, just so we can see the total. Okay. So now the total for my assets, okay, is going to be equal to 72,850 plus 6,000 plus 550. Okay, that's going to give me 79,400. Okay. Let me not format it, because if I format it, then it won't let me merge it. Okay, there we go. 79,400. Okay. So the total for my assets is 79,400. Okay. Now remember, both sides of the equation need to equal. Okay. So now let's see what this side of the equation is. So for my liabilities, I only have one liability, which is 350. Okay. And then for the total of my stockholders' equity, okay, I'm going to have 75,000 minus 4,000 in dividends. Make sure that you get these either additions or subtractions from the equation, okay? Plus 25,500 minus $8,000 minus 5,500 minus 1,650 minus 1,500 and minus 800. That's going to give me 79,050. So now if I get my 350 plus my 7950, that gives me 79,400, which is what my total assets are worth. So if I add these two up, it gives me my 79,400. So we are in balance, okay? So I have total assets of 79,400, I have total liabilities of 350, and I have total stockholders' equity of 79,050, okay? This is the hardest part of the problem, keeping the accounting equation in balance, okay? Now, that is the first requirement. The second requirement says briefly explain why issuing common stock and revenues increases stockholders' equity while dividends and expenses decrease stockholders' equity. Okay, this is requirement 2. Okay, so for requirement 2, we have to understand that stockholders' equity is the right of stockholders, which is basically the owners of the business, to assets of the business. Okay? These rights are increased by issuing common stock and generating revenues from the business, and are decreased by paying out dividends and expenses. Okay, so stockholders' equity is impacted by all of these items, by common stock, dividends, fees earned, and all of the expenses. Okay, so common stock will always increase your stockholders' equity. You issue stock, that will increase your stockholders' equity. Okay, you pay out dividends, that is an outflow of money, that will decrease your stockholders' equity. You generate fees. So you're in the business, in this particular case or an example, we are managing rental property. So you manage rental property, you generate revenue based on managing those properties. So you generate money. Fees earned is your revenues, okay? And then of course you have business expenses. All of the expenses associated with your business deduct or decrease your stockholders' equity, okay? So we just need to be clear and understand the impact of the transactions to the stockholders' equity section of the accounting equation. Okay. Number 3, requirement 3. Let me see if I can, before I go do requirement 3, let me move this down. Generating revenues. Let me cut this and paste it down here. That way we can see it. There we go. Okay, so that's requirement 2. Now requirement 3, okay, is asking for, let's see, it says, let me go back. Determine the net income for June. Okay, net income, okay, equals revenues minus expenses. Okay. Well, let me rephrase that. Okay, net income is basically the excess of your revenues minus expenses. So you have two options. If your revenues are greater than your expenses, then you're gonna have net income. Okay. Okay. If your expenses are greater than your revenues, then you're going to have a net loss. Okay, so you have those alternatives. If your business is generating income, it's because the revenues are greater than the expenses. If you are generating a net loss, it's because your expenses are greater than your revenues. So in this case, they're asking us to determine net income. Okay, so for us to determine net income, we have to have two components: revenues and expenses. Okay, so let's look at the accounts. This is my revenue account right here. Let me shade it in a different color. Let's do lime green. Okay, so these are my revenues. My revenue account has a balance of $25,500. So I've got revenue of $25,500. This is where I'm getting it, and you always pick up the ending balance. Okay, this is your fees earned. This is your revenue account. Okay, and the total that you have on that account is $25,500. Now you have your expenses. All of these are your expenses. Okay, So let's do orange for those. Okay, so all of these are your expenses. So we're going to add all of my expenses. I'm going to have 8,000 plus 5,500 plus 1,650 plus 1,500 plus 800. So I've got expenses of 17,450. So which one is larger, revenues or expenses? In this case, my revenues are greater than my expenses, so that means I'm going to have net income, okay? So net income is your revenues minus your expenses. So I'm going to have my revenues of 25,500 minus my expenses of 17,450. I'm going to have net income of 8,050. Okay, that is going to be my net income. That is how much income we generated this month off of our business of managing rental properties. Okay, so requirement 3 is we have net income of 8,050. Okay, requirement 4. Okay, let's see what happens in requirement 4. Requirement 4. How much did June's transactions increase or decrease stockholders' equity? Okay, so let's see. So we need to figure out the accounts that affected my stockholders' equity, which are these accounts right here. Okay, anything under stockholders' equity. So what happened during the month? Well, we issued stock of $75,000. Okay, so we have a common stock increase, okay, of $75,000. That increased my stockholders' equity. Okay. What else happened? Okay. During the month, we also paid out dividends of $4,000. Dividends is subtracted. Okay, so we had a dividend payment of $4,000, and that is subtracted. Okay, and it's subtracted because dividends are deducted. Look at minus dividends. Okay, and then we generated net income, and we calculated net income in requirement 3. We generated income of 8,050. Okay, so let's add those 3 components and let's see, okay, our increase in stockholders' equity. And I'm going to abbreviate stockholders' equity. Okay, so I'm going to have 75,000 minus 4,000 plus 8,050. That's going to give me an increase of 79,050. Okay, so my stockholders' equity increased by $79,050. What comprises that? Well, 75,000 came because we issued common stock for 75,000. We had to pay out $4,000 in dividends. That is a deduction because we are paying out dividends. And we generated net income of 8,050 calculated in requirement 3. So that causes me an increase of 79,050. Okay, this is the entire problem. Okay, it's long, it's a little bit challenging, but we need to clearly understand what is going on in each transaction. Okay, and remember that after every transaction, you get your wonderful calculator out and you make sure that your accounting equation is in balance. Okay, assets must always equal liabilities plus stockholders' equity. If you do a transaction and your accounting equation is not in balance, you need to stop what you're doing and figure out a way to correct it, what was done right, what was done wrong, before you move forward. If you continue moving forward being out of balance, then anything from that point forward will be wrong. Okay? So it is very important that you analyze the transaction, you figure out the accounts that it's being affected, and whether it's going to be an increase or a decrease to those accounts. Okay? I want to please remind everybody to read the chapter. I am not going to be covering all of the content in my lectures. That is up to you. You do the chapter reading and then you listen to my lectures so I can explain how to work out the problem. And hopefully my explanation or me working out the problem will help you better understand and practice on your homework. Now remember, you have 2 attempts for your homework, and I'll always keep the highest grade. If you didn't score 70% or better on your first attempt, I highly encourage that you use that second attempt to practice some more and be able to better understand the information. Questions, concerns, do not hesitate to contact me. Remember that The homework assignments and the quizzes are not optional, they are mandatory. If you don't complete your homework or your quizzes, you will not have the feedback to be able to review for when you have to take your exam. Okay, so please make sure that you complete every single problem. That way, the assignments close on Sunday. On Monday morning, you'll have access to the correct answers for all of the homework problems, and you can go back and review and understand what you got right, what you got wrong. It's very beneficial. So it's very important that you complete your assignments. Okay, so that is it for problem 0101A, problem 11A. Okay, and until next time, have a wonderful rest of your day.